If you don't have an account, please visit AvaTrade.com or whatever Ava website you use. Open up an account, an AvaOptions account. To do so, if you don't have one yet, go to the AvaOptions platform page and click to open an account. You can open a demo account or a real account. You can also do the same from the AvaOptions mobile app, available in both Google Play and the App Store. Okay, it's time to get started. So let's hop right in. Let's kill this. Okay, this is the AvaOptions web trader. I've already logged into my account. You can see my cash balance up at the top, which is $25,000, and there's just one open position. This interface is pretty much identical to the interface that you see using the mobile apps. But of course, a mobile app is in a very small screen, so you just see one of these areas at a time. Either you see the markets, or you see the trading screen, which is a chart with a profit and loss diagram, or down at the bottom, you see open positions or risk or history or closed trades. So let's get right into this, this interface, and let's have some quick pointers. Down on the left, you have the markets. If you scroll down, you can see all the different instruments that we offer. We have the majors at the top, followed by gold and silver and crude, then equity indices, and then all the miners and EM currencies. You can also choose it by category. So you have all, or you can choose favorites. I have no favorites defined in this account because I just set it up. Majors, metals, etc. If I go into all and I click these asterisks, these stars, these are defining my favorites. And then when I go to favorites, there they are. Very easy to use. Just keep it on all since it's so easy to use. You also have a search window. So if you're looking for all of the Kiwi pairs, just search, put in NZD, and there you go. There are all your Kiwi pairs, for example. So I've chosen US 30. Let's click Eurodollar, our favorite. Eurodollar, when I click Eurodollar on the buy or on the sell, you get, doesn't matter, you get a chart. The default chart is showing 1 minute chart of spot. So these are 1 minute candles. If I want to change the candles, I just click on that 1 minute icon, a 1 minute button. I can look at 5 minute charts. I can look at 30-minute charts. These are similar to what you see in other trading platforms. In the mobile app, it works slightly differently. You choose the period of history that you want to see, and the platform will automatically choose the candle size. So you could look at the last hour of trading, the last day, the last week, and they will automatically choose the candle size. Just a slightly different way of doing things. When you have the this chart up, we always have on the right side a profit and loss diagram. So in this example, I'm looking at buying 50,000 Eurodollar spot. If the market goes up, I'm going to profit, and it shows you what my profit will be in dollars. If the market goes down, I'll have losses, and it shows you the losses in dollars. I can add, by clicking this word limit, I can add limit orders. I can put in a take profit and a stop loss. I can also put in an entry limit right in the middle. So I can say I want to enter at a specific level, and if I'm filled, I have a take profit and a stop loss. Advanced feature, if I double click on this handle, I can put in specific rates. So let's say I want to get in at 97.90, apply. So I want to buy at 97.90. I'll double click here, and I want to get out at 99. And that take profit is good until canceled. And I can put in a stop loss. I'll put that at a 97.50, and I'll make that stop loss good until the end of the day. So you see very clearly the whole trade, where I'm getting in, where I'm getting out. I click buy limit to execute the order. I now have my execution window. It says I'm buying with a limit. I'm trying to buy at 97.90, and if it's filled, I have a take profit and a stop loss. Execute. Done. You see it popped into the bottom right away. All three lines are in blue because none of them have been filled yet. Simple and clear. You also have on the right side of this execution window, market information. Let's click it here. I click this I, it's the same thing. I have a trading button and I have a market information button. The market information button is showing us the daily high, low, and close, and we have implied volatility information. The blue line is showing us implied volatility now. Green is where implied vol was a week ago. Red where it was a month ago. Just for the fun, let's look at the pound instead. You see implied volatility has exploded from 13 vol on the 1 month options all the way up to 20 vol now, or 19 vol now. A week ago, in the thick of the disruptions to the pound, vol was even higher. We can see implied volatility charting. On the left side is the vol for an out of the money put. That's a 10 delta put. On the right is a 10 delta call. So you see the full skew of the market. And the orange dot in the center is showing you realized vol for the period. So we can look at 2 month, 3 month. We can see that implied volatility for 3 month is much higher than it has been for the last 3 months. Want to get some more information? Let's look at implied volatility history. To do that, we click on our strategy icon right here. The strategy icon default is spot, remember? But if I click it, I can choose options trades. I can also choose a chart with no P&L diagram, and I can choose implied volatility. This is relatively new. If I click the implied volatility icon button right here, I now get a chart of implied volatility. This is showing us a chart of implied volatility for the past 1 year. We can look at the last 6 months. We can go back 3 years. There was a spike a while ago because of COVID, initial COVID fears. But right now, implied volatility is pretty high. It was higher a week ago, as we said. So we've got implied volatility for 1 month options, but we can click here and change it. On settings, we can look at 1 week options, 1 month options, whatever we'd like to have. I'm going to leave this on 1 month options, and I'm going to add a chart of realized volatility. I'll choose the pound, and I will look at realized volatility, 1 month vol again. And now you can see that, of course, we have experienced higher volatility. You can see in general that implied volatility generally is higher than realized volatility. That's simply the common risk premium for the options seller. When you're selling options, you're taking risk. Options buyers generally are people who want to hedge, who are looking for insurance. So generally speaking, we should have some sort of a premium to the options seller. And this is why it's so common amongst professional options traders to be selling options more often than they're buying them. So right now you can see implied volatility remains higher than realized volatility. Let's look at 3 month vol, also for the pound. Also delta neutral. Let's look at 3 month vols. We'll add that to the chart. Also moved way up unrealized vol, not that interesting. Let's look at something like euro sterling. Instead of looking at the pound against the dollar, let's see if this spike in volatility is due to the pound or due to the dollar or both. So I'll put in here euro sterling, 1 month, delta neutral implied vol, and there it is in red. So you can see that the euro sterling is historically, or for the last year, has been significantly cheaper than the pound, than cable vol. Let's just get rid of this realized vol. Okay, so in blue we have pound against the dollar, which is commonly called cable, implied volatilities, and in red we have euro sterling. So you can see that pound against the dollar vol is much higher because it includes both sterling and dollar implied volatility. And when you look at euro sterling, you definitely have a spike in the last couple of weeks, but that's really, you can see, is coming mostly from sterling. Okay, suppose you look at this and you say, you know what? I think euro sterling vol is rich. I want to sell it. I click on that euro sterling button and I say trade euro sterling. Because we're looking at 1 month delta neutral, the way you trade delta neutral implied volatility is with a straddle. I click trade and automatically I get a straddle. I get the 1 month straddle, which matches the chart that I was looking at. So I'm all set to go. I'm all set to buy 1 month straddles, or I can sell a 1 month straddle. If I want to sell them, choose my size, choose my expiration date. I already chose 1 month. Maybe I want to do a week longer. I'm going to go to the 10th. Sell. I'm happy with it. Execute. Done. And then it pops into our open positions right up at the top. So we've sold euro sterling put and a euro sterling call. Remember that all positions get marked to market on the closing value. So you see a negative P&L right away because of the bid-ask spread. Over time, if you're right, you're going to earn that money back and more. Here's an example for the advanced class. This orange, the red and green line shows us our profit and loss at expiration of the option trade. So if I sell a straddle and the market doesn't move, I'm going to keep all of that premium. So $1,200, $1,250, I'm going to keep that premium. Today, if I open and close the trade, I only suffer the bid-ask spread. So the orange line shows you your P&L today. The red and green shows you P&L at expiration. We have this nifty horizon line. It's currently showing now. Remember, the orange matches the orange of the P&L. As time goes by, the value of the option decays and the P&L approaches the red and green line. So today, you have this P&L. Over time, you earn the decay, you earn the time value for having sold the options. By the way, everything here is flexible. We can show it like that. I can also zoom in by clicking, holding my mouse on the y-axis and go in a little tighter. Okay, pretty neat. If I want to look at one of those positions, I just choose it in my open position. So now I've chosen Euro Sterling. It's showing me the P&L of that Euro Sterling option as of right now. It's showing me when I executed the trade, when is it expiring, where was Euro Sterling when I opened the trade, where is it now, what's the implied vol, etc. All the information is here. I have an unrealized P&L of minus $78 because of the bid-ask spread. If I want to close the position, maybe I want to close part of it. I'm going to close 20,000 of that position. I click execute, it's done, and you see the open position is now dropped to 30,000 instead of 50,000. Okay, so this is how you manage the platform. Open positions now, we have one position in Kiwi cash, one position in Eurodollar cash, and we have two positions in Euro Sterling. If I choose the Euro Sterling options, both, they combine on the screen. They have the same expiration, the same strike. So you're only actually seeing one on the screen, but they're both highlighted, they're both there. But you see it's a little skewed because on one side I have 50,000, on one side I have 30,000. There's the short call, and there's the short put. Okay, let's clear that out and get back to trading. Let's look at Aussie dollar. Okay, so we've shown you now how to use our implied volatility tool. Once again, I'm looking at Aussie dollar now. If I click implied volatility, it's still showing me the same chart. I can add Aussie dollar implied volatility, put it on the same chart. We've got plenty of flexibility. You can change the colors, you can do whatever you like. You also can click this little icon, which means pop it out. Take this screen into a separate window. So now, even though this is entirely web-based, this is just working in your browser, I can have this chart, I can drag it off to another screen. If I close it, I can close it. We can also pop out our open positions and move it somewhere else. You can resize it. Okay. Other advanced features, we have filtering and sorting. So I can just look at my calls, for example, or I can just look at my puts. All these things are available to you. And by the way, they're available in the mobile app as well, just by long pressing on the headers. Risk Manager, let's look at the Risk Manager. Risk Manager is a key feature of our platform. The Risk Manager aggregates your risk across options and cash or spot positions to show you your net risk various ways. So in this example, we're long Eurodollar 50,000 of spot or 50,000 of cash. We have some Euro Sterling options that add up to a net delta of short 10,000, and we're long Kiwi. So in this picture, we're long euros, we're long Kiwi, and this is showing everything in dollar equivalents, and we're short dollars. So we're long euro, we're long Kiwi, we're long sterling, and in all three, net, we're short dollars. You can see your total delta by currency, total vega by currency. We're only short options, so we only have negative vega Vega being your exposure to a 1% change in implied volatilities. So if implied volatility goes up by 1, we're going to lose $100 in euro sterling. Total delta by currency pair. Again, we're long euro dollars, we're long Kiwi dollar, we're short euro sterling. Break it down into the individual currencies and you get that. Dollars, euros, Kiwi, etc. If I click on any of these instruments, if I click on Eurodollar, all of our Eurodollar positions will populate in the screen. So all we have is Eurodollar. Position is 50,000. In fact, that was done as a limit order, wasn't it? And it looks like it got filled. That limit order got filled. The market dropped while we were speaking. So I did get to buy at 97.90. That was my fill. That was my limit order initially. So even while we're speaking, the order got filled. Kind of neat. If I close this, it'll show up back in the screen. I can click this X to minimize. If you have a smaller screen, got a lot of room to work with. Again, please feel free to send in some questions. I am keeping an eye on things. Okay, so we've reviewed implied volatility. Let's look at the strategies for a minute. I'm going to clear this out. I'm going to go back to cable. Strategies, we have calls, call spreads, call ratios, put spreads, put ratios, butterflies. We've got all these different strategies. One strategy you might not be familiar with is a synthetic forward. Synthetic forward is a combination of a call and a put at the same strike. If I buy a synthetic forward, it means I'm buying a call and selling a put. If they both have the same expiration date, let's say they both expire in 1 month, that's the idea. In 1 month, if the market is higher, then I'm going to be exercising my call. I will own the pound against the dollar. If the market is lower, then someone will exercise the option against me, and I will be, again, long the pound against the dollar. So this is a synthetic forward. In either case, I'm going to own the pound against the dollar. That's a synthetic forward because it's not a cash position. It's in the future. I'm buying a call, I'm selling a put. I can set my strike anywhere I want, but the economics aren't really going to change. Because what am I doing by changing the strike? I'm just changing the price at which the call gets exercised or the put gets exercised. If it's above the fair forward or below the fair forward, I will be compensated in the current price. By the way, this white button in between buy and sell, I can change what I'm seeing in the buy and sell buttons. I have a dollar account, so here I'm seeing the dollar amount of this trade, what it's going to cost me to execute this synthetic forward. I can also see it in price, which means it's in the same units as the underlying. Or if I have a different currency account, I can see it in the other currency. So if I do, let's say Euro Sterling, choose Euro Sterling synthetic forward, I can see it in price terms, I can see it in sterling terms, or I can see it in euro terms. That's a toggle. You also have this in the mobile app. Same thing here in the P&L diagram. The default is in my account currency, but I can see my P&L if I choose to see the P&L diagram in pounds sterling. I can see it in price terms, euro terms, or dollar terms. That's a synthetic forward. Now, why would you use a synthetic forward instead of simply buying the underlying asset? The reason is in particular applies to EU customers. In the EU, retail customers are only offered 30 times leverage, which is 3.3% margin. Options trades, however, get 100 times leverage. So if you're an EU customer or an Australian customer has the same rules, you benefit from using options instead of using the underlying spot or CFD. Options get 3 times leverage compared to spot. Same economics. You look at the diagram, it's clearly you're either going long or you're going short, but you get 3 times the leverage. Other strategies you're already familiar with, I'm sure, like a strangle, set your call, set your put. Let me show you some new or some hidden features here that you might not be aware of. If I double click on the strike handler, I can put in, well, there's a little bit of a rounding issue. I can choose whatever strike I like here. I don't have to stick with the exact strikes that are offered by moving the market, by moving the handler up and down. I can say that I want a strike of 88.05. Okay, and it will automatically price 88.05. You're not limited by the automatic strike increments. I can also choose an at the money or an at the money forward or a delta neutral strike. So if I choose at the money forward, it's here, the forward is 0.8713. If I choose at the money, it's just going to give me the current price, 0.87045. I can choose any strike I like. Of course, buy and sell. If you want to execute, just go and execute. It always tells us what trade we're doing, how much currency I'm going to receive or premium I'm going to receive in the account value, in the account currency, excuse me, the available margin, additional margin required for this trade, and my bid-ask spread. I like the trade, I click execute, it's done, and there it is, popped into our open positions, and you can see how it impacts the risk manager right away. Moving on, we've got some amazing charting tools that we haven't shown you. We've always had Autochartist integrated into our platform, but we've enhanced the way Autochartist works. Let's say we're looking at crude. In crude, we have here next to the word crude, next to the symbol, we have this number 2 in an orange dot. And by the way, you have this in the mobile app as well. If I click on that orange dot with the number 2, it's telling me that we have 2 automatically generated signals or a chart pattern recognition from crude history. They're both channel up. One is based on the 15-minute chart and one is based on a 30-minute chart. It's telling us the quality is very high and the clarity is very high. Let's click on this to learn more about it. The picture takes a second to come in. It's identified with this blue vertical line. At that point is when this signal was identified that the market is within a channel and the channel is trending up, and we expect the market to continue higher. And indeed, it's been correct. This signal was correct. I did not choose this in advance. The analytics are very honest. It will show you whether the signal was accurate or not accurate. As soon as it's launched, as soon as a signal is recognized, it will be available here, and you can track it, you can execute it. If I click this button, I'll see more information. This is a channel up button, so the direction is up. It was identified today at noon GMT. It's a type of trend, it's called continuation. If I click this question mark, by the way, it'll explain more about this this component of the signal. It'll tell you about the quality, right? The trend, the uniformity, clarity, etc. And then this tells you more about what is a channel up. You like it? Let's apply the pattern to our chart. Completely built in. This, by the way, I can grab this and move it out of the way. I can close this a little bit, give us some more space. So there's the chart, there's the pattern. You can see where it was identified. And in fact, it was identified when the market was trading at around 83. We moved up now to 83.65. We're still within the channel. The recommended trade was to put in a stop loss, to buy crude with a stop loss at 82.59. If I like this trade, I click to buy, choose the size that I want to do. Maybe I want to do less. Execute. It's done. Well, that was quick. And here it is in our open positions. Right in, we bought crude with a stop loss as recommended. Let's look at a different chart. Let's look at the pound. There's one relevant signal right now. It's called a rising wedge. Similar story. Apply the pattern. You can see it. Do I like it? Do I not like it? Do I want to follow it? It looks like it's been accurate. It said to buy. This was identified. The spot was trading at around 112.19. We moved up about 60 pips since then. Let's look at gold, trading at 116.85. Some information's just come out because I see the market's just popped. If I look at, let's look at the 30-minute chart. Was a rising wedge. Apply the pattern. Okay. Some news that clearly has just come out. I'm sorry, I'm not aware of what it is. That's taking us up out of the range. Probably we're going to get a new signal shortly saying to take your profits. But there's the trade. It's always honest, as I mentioned. We can choose, let's look at the US 500. Also moving higher. We've got a signal that was identified at 12:30 GMT, so not too long ago. Apply the pattern. There's a resistance line going across the middle. Okay, so we got a lot of great tools here with Autochartist. We really like their stuff. You can add more things to the chart. These are charting tools, so I can add stochastics if I like. There's stochastics down on the bottom. It's a little light. If you want to edit that, just go here, edit, and we can make our lines thicker. And save. So those are little thicker lines. We've got moving averages, all the things you want. We also have drawing tools. If you want to add an arrow because you want to send this to a friend, I'm going to add an arrow from here to here saying, check it out. And I can edit that arrow. I guess I can make it thicker if it wasn't thick enough, and I can put it in yellow, whatever you'd like to do. And that's part of the chart. So as I change the size of the chart, if I move things around, it stays in there. It's part of the chart. You want to use this and you want to send this trade idea to a friend, you can click our screenshot button right here. There's a little icon in the middle of the screen, screenshot. If I click screenshot, whatever we drew is going to be downloaded as an image onto my desktop. And there it is. And I can open it. I think you'll be able to see it. There it is. It saved that image, and you can send that to a friend or to a colleague or put it on a website recommending a trade. You also can send a link. There's a sharing icon. Click this sharing icon, and you'll generate a bit.ly link, which you can then copy and again send to your colleagues, send to friends, put on a website, share, and others can see your trade, see if they agree with it, and copy it. Or do the same, or tell you you're an idiot. Lots of great tools there. So that's Autochartist. Please definitely get familiar with it. And if you like it, for example, let's say I look at dollar Swiss. Let's get rid of this, get rid of the tools, get rid of the charting. Okay, let's choose dollar CAD. And I see something in Autochartist that's interesting. I see this channel up in a 4-hour chart. I add it in here. I think, hey, that's pretty neat, but I don't want to trade spot. I want to trade an option. Oh, by the way, here, this is a bullish signal, right? It was a recommendation to buy according to automated chart recognition. And in fact, we've gone the other way. We've just broken out and we've hit what was a stop loss. It says take profit because what's actually happened is the market's gone through the stop loss. Going back again, looking at the idea itself, it had a stop loss at 136.57, and we've now just gone through that stop loss. So it was a trade recommendation, but there was a stop loss, which has now been breached. Let's look at cable. Let's look at an idea there. This is a 30-minute chart, and let's say this one we like. So it's bullish, but instead of trading spot, maybe we want to trade an option. If we just change this to a call, that information is still there on the screen. So let's look at doing a whatever. Maybe we want to do like a 3-day call. And we want to set our strike according to the trade recommendation. You can use this information for trading spot, for trading options. It makes more sense with options if you have a longer term interval. Let's look at gold. What was the gold interval? You've got a 24-hour interval channel down to a bullish signal in gold on a daily chart. It's bullish. Apply the pattern. Bullish signal on a daily chart. Let's use this to trade an option. Change it to a call. Let's do it on a, let's say, a 2-month option. And you can use it to set your strikes. A 6-month option, there's a 6-month option. It's a bullish signal. So I'm going to use this thing to buy a call. and maybe I'll even sell a put against it. So I'll buy a call and sell a put. That's called a risk reversal. I'm going to do two options. I'm going to buy a call because I'm bullish. I'll buy it right here at the market, and I'm going to sell a put down below. Great way to put on a trade and reduced cost. You're buying a call and you're paying for it by selling a put. Any questions, please type them in. You guys are being very quiet. Let's check. How are we doing on time? Okay, we're almost done. I just wanted to make sure that I show you some of these features. We've spoken about implied volatility and strategies. We've spoken about setting a strike by double-clicking on the handler. We've spoken about Autochartist, option chain. I didn't speak about option chain yet. One last new feature I want to show you. Some of you are probably familiar with exchange-traded options, and you're used to seeing, instead of this unique interface where we show you history of the market, the confidence range, where we might go in the next 3 months or whatever the period is, and a P&L diagram, you're more used to seeing a grid of prices. So let's look at the pound 1 month options. If I click this icon called option chain, the view changes. So now I see prices on the, in the center are the strikes. On the left side, you have the bid and ask for a call. On the right side, you have the bid and ask for a put. And then you have the deltas on either side and the mid-market volatility. So this is more similar to what you see in exchange traded options, which is kind of neat. And if I choose my option strategy, if I put in, let's say, a strangle, I'm going to have two handlers. I've got a call and I've got a put. So you see how it's, I'm going to change the strike interval. There we go. So you see how we've got a call and a put, and it's showing us the call on the left, which option we're choosing, and the put on the right, which option we're choosing. If I turn the option chain off, it looks like that. This is our unique interface, buying a call, buying a put. Put the option chain on, it looks like that. I can change my strike interval, you know, the information that I want to see on the screen. Here I'm seeing every 200 pips. Here I'm seeing every 100 pips. Here I'm seeing every 50 pips. I can keep zooming in. It lets us see all the strikes. And why have we created this option chain? First, some people are asking for it. Secondly, we're getting ready to launch options on the S&P 500 and then the NASDAQ and others. Works just like before. Execute the trade. No difference in the execution. No difference in the pricing. It's just a different way of seeing the market. Option chain on, option chain off. We've spoken about option chain. We've spoken about the risk manager. History. You can see the history of trades that we've done today, or I have here the ability to look at the last 3 days, the last month. I can choose any period I want and pull in all of my trades. Same thing for closed trades. I can see the trades I've done today. Open positions, let's choose a few to close. I've made money in that first initial Eurodollar trade that I've done. I'm going to take profits, execute, it's done, boom, and there you go, and close trades nice and quick. That's all we've got time for today. Thank you very much. I want to show you up here, we also have, you can see your equity, your margin status, etc., which is the same as you have in the risk manager. Same information, but available to you at all times. Okay. That's all we've got for you today. Thank you for joining us. Please do chime in with questions. You do have here on the menu on the left side the ability to make your deposits and upload your documents, withdrawals, video tutorials, trading tools like an economic calendar, and some options information for another webinar. And we have chat. You can come in the chat and you can start sending us some questions and asking us. And if we're not there, we will get back to you for sure, in case nobody's there at the moment. Thanks again for joining us. Have an excellent week of trading. There's plenty to trade, lots of volatility. Thank you. Bye-bye.